today is a day, I'm going to give you an update, because today is a day we're likely to get a breakout, okay? And I'm going to go into that. So, again, this is a quintessential wave 4. I talked about this in my last full-length update. This is likely wave 1, this is likely wave 2, this is likely wave 3, this is likely quintessentially wave 4, where you get those complex corrective accumulations, and you're looking for a final wave to 42.7 as wave 5. Now, this is where it gets interesting. It's very likely, as I said last time we talked at length, that Bitcoin is going to 42.7, thereabouts, 42,000, thereabouts is our target for this move. So many reasons why. I'm not going to bore you with the reasons why. There's a lot of confidence at the $42,700 level. You can look at this Wu-Tang symbol or W pattern, bull market, or sorry, a bullish reversal pattern, breakout, the height of which superimposed from the side of breakout gives you thereabouts 42K. You can also look at this inverse head and shoulders breaking up and out, the target of which is 42K. And finally, 42.7 is the phi ratio of the preceding move down. Okay, if you take the Fibonacci retracement level of this move, you get 42K, 42.7 thereabouts. Okay, 42,700 is very likely. Okay, now what happens after? Do we immediately go to all-time highs? No. Do we immediately go to $1 million? No. I'm going to tell you why. With a high degree of probability, you can expect Bitcoin to hover between $40,000 and $42,000 for the rest of November. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 3rd, 2023. And today I'm going to talk about my cryptocurrency predictions for November 2023. And obviously, as usual, it's always going to be chart-based, technically based, right? I'm not going to necessarily talk about news events. Not that that's bad, but I'm just going to stick to my strengths. All right, if that sounds interesting to you, let's get started. First and foremost, actually, let's start with the US dollar, okay? If you've been following my work, you know that the US dollar is our most important indicator in these cryptocurrency markets. It's not just the most important indicator in the crypto markets, it's also the most important indicator in all markets if you're paying attention. Okay, the US dollar is inversely correlated to risk on assets. Cryptocurrency, Bitcoin, they're risk on assets. You can chart Bitcoin against the US dollar for as long as Bitcoin's existed, and you'll see an almost perfect inverse correlation, meaning if the dollar goes up, Bitcoin goes down. If the dollar goes down, Bitcoin goes up. What am I seeing in the US dollar currency index, meaning the chart that shows the relative strength of the US dollar? Well, we are breaking an important support level, okay? And I've got it marked out by this line right here, okay? This is 35 days of support, and as you can see on this chart, on the hourly chart, right? US dollar currency index on the hourly chart, for about 35 days, we've put in this up and down range, right, which we would call a distributive range, right? Distributive ranges break to the downside, accumulative ranges break to the upside. So up and down for 35 days, and what you're doing here is you're showing weakness on major support. Okay, what I'm seeing is a major break of support, okay, and that ushers in our run in crypto, our run up in risk on assets. Now, very important, if you're paying attention, you notice that. What is that? That is a gap, okay? That is a gap in trading. And if you know this chart, you understand that all gaps are filled, All right, they're not always immediately filled, but eventually filled. What does that mean? Well, for us, it doesn't mean much in this context. So let's zoom out and I'll tell you why. I'll show you why it doesn't mean too much. Okay. So if you're on the weekly time frame, so a really high time frame of this US dollar currency index chart, you can see very clearly that we're putting in what looks like a zigzag. A zigzag is a 535 corrective pattern in Elliott wave theory. It's one of three major corrective patterns. You have flats, you have zigzags, and you have triangles. Yeah. So zigzags, 5 waves down, 3 waves up, 5 waves down if you're going down, right? So it looks like we put in our 3 waves up, and it looks like we're starting our 5 waves down. Now, why does the gap that I pointed out at the top of this distribution range, right, distributive range, doesn't mean much? It's because the context of this larger move is corrective, meaning we will eventually retrace upon it. Okay, so given that the chart is likely to, given that if the US dollar does break down and comes down to this major support, right, where we have, and this is a major support. I mean, this is many years of support. I'm not going to go into it right here, but as you can see, I'm on the weekly time frame on this chart, and this has been support ever since June of 2008, okay? So if we break down to this major support level on the US dollar currency index chart, we should expect a reaction, a move back up. And that move back up would resume the impulsive nature of the chart. Or this may be part and parcel of a corrective sequence, and that's just the first wave, and this is the second wave, something like this, and then you're expecting an even a final capitulative wave. Who knows? In any case, you're coming down to major support, so we expect a move back up, which would eventually fill that gap, right, in some time later in the future. So we're not too worried about that gap being filled in the immediate short term, given that it's highly likely that it's going to be filled. We're not in, we're in a corrective move, okay? So given that it's a corrective move, that gap can be filled at any time. I hope that makes sense and it's not too confusing, okay? And as you can see, look, this is already breaking down. Okay, this is already breaking down this 35-day support level on the US dollar. And that tells us a lot, okay? That tells us that crypto is breaking up. Okay, now, don't forget, any break of significant support has to be retested as resistance. So eventually, soon, you're going to see a move back up, retesting this broken support as resistance before a breakdown in earnest. Okay, so that's the US dollar. This is also why today should be a very important day for traders, for speculators, for investors to pay attention to risk on assets, cryptos, stocks, all that stuff. You're likely to get a major move today because of what's happening in the US dollar. The US dollar is our liquidity provider. That's what moves the markets, nothing else. Not SBF getting arrested, not any other, like, whale buying this or that. That's not it. Now, let's move to Bitcoin. I saw a really big channel. I'm not even going to mention which channel, but the trading expert on a major YouTube crypto channel said Bitcoin is on the verge of breaking down. Now, it couldn't be further from the truth. Look at this daily chart, okay? Very simple. You don't need eons of experience to be able to read this very simple candlestick chart of Bitcoin against the US dollar on the daily time frame. What do you see? Well, first you see a range, a sideways range that's going up and to the right. Okay, that tells you two things. One, that you've been consolidating, okay? That consolidation could be distributive, meaning it could be consolidation to break down, but it's highly unlikely, and I'm going to tell you why in a second. Also, it tells you, given that it's up and to the right, that there's a lot of buying pressure. So whatever move that we're going to see after this, if it's to the upside, it's going to be violent because it's an up and to the right consolidation. That means lots of buying pressure. It couldn't even stay straight orthogonal, okay? The other thing you can tell very clearly by this pattern right here is the candlestick is showing strong buying pressure here at the base of this accumulation pattern. Okay, I called it accumulation, but let's just say, playing devil's advocate, let's say you don't know and you never really do know. You're always assuming in trading, but let's say it's a consolidation pattern. It could break up, it could go down. Okay, let's accept that. Well, it's more likely than not to break up because these candlesticks are showing hammer candles at the base. As you can see, every time we hit this support level, we show strong buying pressure, bouncing up and out. Okay, these are daily time frame candles. They're not like 15-minute candles. So understand the importance of showing hammer candles on the base of support. Okay, so for those reasons, and given that you're coming into this consolidation from a break up, okay, so meaning you're coming in from a move up, you're likely to continue it with a move up. All right, this is what we call in Elliott wave theory an impulse, and this would be a quintessential wave 4. I've talked about this in our previous well, I haven't done an update in a while, I know. It's just nothing's happened. Look, I'm not going to give you a daily update on the the ongoing really small amplitude sideways accumulation or consolidation. That's just nothing there. Today is a day I'm going to give you an update because today is a day we're likely to get a breakout, okay? And I'm going to go into that. So again, this is a quintessential wave 4. I talked about this in my last full-length update. This is likely wave 1. This is likely wave 2. This is likely wave 3. This is likely quintessentially wave 4, where you get those complex corrective accumulations, and you're looking for a final wave to 42.7 as wave 5. Now, this is where it gets interesting. It's very likely, as I said last time we talked at length, that Bitcoin is going to 42.7 thereabouts. 42,000 thereabouts is our target for this move. So many reasons why. I'm not going to bore you with the reasons why. There's a lot of confluence at the $42,700 level. You can look at this Wu-Tang symbol or W pattern, bull market, or sorry, a bullish reversal pattern, breakout, the height of which superimposed from the side of breakout gives you thereabouts 42K. You can also look at this inverse head and shoulders breaking up and out, the target of which is 42K. And finally, 42.7 is the phi ratio of the preceding move down. Okay, if you take the Fibonacci retracement level of this move, you get 42K, 42.7 thereabouts. Okay, 42,700 is very likely. Okay, now what happens after? Do we immediately go to all-time highs? No. Do we immediately go to $1 million? No. I'm going to tell you why. With a high degree of probability, you can expect Bitcoin to hover between $40,000 and $42,000 for the rest of November. Okay. Now, if indeed our analysis holds that this is an Elliott wave, okay, wave 1, 2, 3, 4, and the measurements play out where if you measure wave 1, retracement of wave 2, and you do the Fibonacci extension of wave 1, retracement of wave 2, you get the projected 1618 to 2 Fibonacci extension of wave 4, or your purported wave 4, which is where you expect wave 4 to be. All that rings true. But you can get this wave and then basically you can initiate an extended wave 5, where wave 5 starts and then goes extended, right? But that's unlikely, and I'm going to tell you why. It's unlikely because this level right here has yet to be retested. And our principle, one of the major guiding principles in technical analysis, irrespective of what tool you're using to do your analysis, be it Elliott wave, Wyckoff, GAN, is high time frame resistances, high time frame supports always have to be retested before continuing. Okay? If you look at this right here, we had been rather, before breaking out in this range, this blue box, for 250 days thereabouts. Okay? We broke out of it. Awesome. But don't think we just break out and continue. What has to happen with a high degree of probability, never know for sure, but with a high degree of probability, is that you come back and retest that as support before continuing. And the way this is likely to be retested, given our read of this move up, is in a quintessential 3-wave retracement, which would take around about the same time it took to come up. So, meaning, given that our Elliott wave from 26.5 up until now has taken 22 days, 23 days, and let's say we hit 42,000 today or tomorrow or something like that, or in a week, that's 30 days that you should expect Bitcoin to do something like this. To put in a move like this, it should take 30 days, okay? And usually in these wave 2 retracements, which this would be a wave 1, right? This would be wave 1, and this would be wave 2, right? The time it takes, right, for the retracement is going to be the time it took more or less for the move up, but remember, the distribution is going to take the bulk of the time. The impulse to the downside and then the subsequent accumulation is going to take less time, okay? It's kind of going to come rather quickly. But what you're going to see is if we do hit 42.7, Bitcoin kind of hanging out. People are going to think it's a repeat of this. The untrained analyst, investor, speculator is going to think, oh yeah, this is just going to accumulate again and break up. But for those of us who have been paying attention, for those of us who really study this stuff, we know that we're going to more likely than not be in a consolidation pattern, which is likely to be distributive, right? For 20, 25 days, 26 days, however long it takes for us to come up, we'll then have a good solid number of days for how long we can spend here. 20, 25 days, let's say, on average. And then we're going to break back down and retest this ever so important level at between 30 and 32K. Okay, so don't expect Bitcoin, even though we're likely to get that move to 42,700 in the coming days or hours. Don't expect Bitcoin to just fly through 42.7. Okay, you have to come back to this level. Why is it this level? Because we spent 250 days breaking out of this ever so important resistance, and 30,000 to 32,000 is very important to the Bitcoin price. You do not just leave the potential buyers, or would it be sellers, market participants, let's say, at this level in the lurch. The price will not do that. Okay, do expect to come back between 30 and 32K. This is why I expect Bitcoin to hover around 40 to 42K for most of November. Now, that was Bitcoin. What about altcoins, Dean? Glad you asked. Altcoins are where the party's at. Altcoins are where the fun is. Because Bitcoin going to 42,700 is great. But to be honest, that's just a 23% move from here. And for crypto, that's not that exciting. Let's be honest, that's not that exciting. Keep in mind that Bitcoin has been up for the year, okay? We're almost finished 2023, and thus far, Bitcoin has gone about 100% to the upside, okay? And once it hits 42K, it'll be up considerably, 130%, right? Altcoins, however, have been pummeled and have not enjoyed any significant gains in the calendar year. Do expect in this move for altcoins to start catching up. Altcoins will start catching up. You can see this not just in their respective charts, but also if you study the Bitcoin dominance chart, which shows the relative value of Bitcoin vis-a-vis altcoins, right? Other assets in the cryptocurrency market, right? If you pull up Bitcoin dominance, you'll see that we're just about to break down from this level, which we've been hovering at for quite some time, right? This level right here. Once we do break down from this level, it's pretty much a free fall, okay? Next significant support is the midline of this channel. So, we bounce off here and then we start, it's just a free fall to the downside in Bitcoin dominance, okay? That means alts are where the party's at. It's alt season once this happens. Be that as it may, looking at the total 2, which is the cryptocurrency markets minus Bitcoin, showing you basically all the altcoins on a single chart, it's a little misleading because there's some really high market cap altcoins like Ethereum, like Solana, and some really low ones, right? Like Vega, right? That are barely breaking $1 million, right? It's a little confusing. But in aggregate, we could expect, and as I said before, the altcoin chart to hit this $1 trillion mark. Thereafter, put in that move, like Bitcoin, back down to this major resistance, retesting it as support. However, as I said, given the variance in altcoin market capitalization, there are some altcoins that could do a 600x in this period, right? There are some altcoins that will do a 400, 500, 600x. That's where the party's at. Good luck finding those, because that is what you want to get involved in during this time as Bitcoin not only goes to 42.7 but hovers. While it's hovering, some altcoins are going to continue pumping. Guys, that's all I've got for you today. I know that was a little long, but we haven't spoken in a while, except for some brief short updates here and there. But I hope this was helpful. I hope this was useful. Like, share, and subscribe if you got value, and I will see you next time. Take care. Bye.
All is well.